Hi, welcome everyone. I am here today with a very special guest, my friend James, and we're gonna nerd out a little bit about finance and accounting and tell you more about the work that we do and the experience we have being CFOs for mental health practices out there that are in need of support to understand their finances and do their financials better. So if you haven't met me, I'm Carla Titus. I'm the founder and CEO of Wealth and Worth Within, and we're a fractional CFO firm providing consulting and advisory services to growing businesses so you can have more profit, more cash in the bank, and pay yourself wealth and build personal wealth. And James, why don't you go ahead and do a quick intro so people get to know you more?
Sure. Yeah. My name is James Childress. I'm a CPA. I've been at this about 20 years, but about 4 years ago, I started my own journey in therapy and found it to be incredible and transformative. And ever since then, I fell in love with working with practice owners after someone was referred to me who needed help. And I'm a real big fan of helping practice owners succeed. It really is our focus. And I met Carla last year at the American Psychology Association conference. And ever since then, we've had wonderful, juicy conversations about what's going on in this space. So, yeah.
Yeah, we have. And we thought this needed to be recorded and put out there for content for people to benefit from. So today we're here to share more with you around what we're seeing with mental health practices or group practices, private practices out there that, industry focused topics that we get to navigate with our existing clients that we're supporting, and then giving you some juicy insight into what we're seeing, as well as some things to watch out for, some trends, some things that we're noticing in talking to other group practice owners, as well as we're doing, some new prospecting and calls. We're hearing a lot of these trends happening, and we thought it would be helpful to share some of that. So I'm going to start us off with a juicy one, which I know you and I very much agree on, and that is profit first. We know that this is a very popular way of managing finances for business owners out there. A lot of them have adopted this type of system, which we both believe is great when you're just first getting started, because prioritizing profit is what we're here for. And at some point in your growth journey, we just feel like that it's no longer enough to manage your practice. And we'll go into more detail as to why. But James, why don't you share a little bit about kind of your feelings about profit first? How do you use it or don't use it with your clients in supporting them from a financial perspective? And then what do you think are maybe some of the disadvantages or what is missing from profit first as a method to manage finances?
Yeah. So, I think what I like about Profit First is I think it's an approachable method for people who are perhaps really new to accounting, really new to bookkeeping, really new to business. It it mirrors what a lot of people saw in personal finance, which is called a envelope-based budgeting method, where you basically give every dollar a job. Makes a lot of sense. The trick is when practices start to expand and they start having a lot of different clinicians at a lot of different rates, a lot of different insurances, and really a whole lot of moving parts, it starts to break down in terms of how it affords an assessment of the financial picture in a pace that's necessary for the practice. And so the
Mhm.
disadvantages, I would say, is there's a lot that can be concealed about what's actually happening in a business through its cash flow. And that's why larger businesses go to the effort of separating tracking profitability and tracking cash flow separately, because they require different levels of diagnosis of different problems, different analysis to figure out why one thing is happening and why another thing is happening. And I'm a huge fan of accrual basis accounting, which is sort of the thing that a lot of CPAs are supposed to be expert at. I've done a lot of that in my background. And because of that, I've seen the benefit of it. And the biggest thing we get is we get that split between what's happening with cash, the timing of receipts and disbursements, and what's happening with revenue and expenses and gross profit and net income and everything else there. They really are separate. So I think if a business owner is starting to grow, a practice owner is starting to grow, and things are getting more complicated, I think they might very well benefit from graduating from profit first into a method that's a little bit more advanced, so they can really see exactly what's going on at a detail level, and they have those levers available to them to pull to make better changes to their practice. So
Yeah, I couldn't agree more. I think Profit First, again, where you're just getting started, maybe you're a solo practice or you have only a few clinicians, can be very helpful to make sure you focus on those right things, those percentage splits. But remember, what James said is a cash flow management method is not what's going to manage your whole practice, profitability overall, unless you're dissecting those variables, which he explained, from reimbursement rates to clinician rates, because compensation might be different for each clinician, and that is not going to be taken into account in those percentages high level. And when you're looking for profit, there's certain levers you can pull around, what you charge, around what you pay people, how you compensate, around what office space you get when, and the timing of all of this is critical. And looking at both profit and cash flow and managing those separately is really going to give you some clarity into what's going to get you the results you're looking for. And in addition, like you mentioned, James, accrual based accounting does play a role in this. I've seen often with practices, I'll say more common is that most of them are not quite ready to benefit from accrual basis, though someone recommended it. And what they didn't realize is that they're going to be paying taxes on money earned throughout the year, even if they haven't received it yet. And at end of year, that can be a big headache because the tax bill can be higher than they actually have available in the bank. So it's something to watch out for. Obviously, with the guidance of an expert, you can kind of dissect that and manage it better and make sure that it's the right thing for your practice from both a tax perspective as well as a financial management. And there's definitely benefits of doing that, since you should be accruing also the expense side of things, not just the revenue side. And this is where I see things go wrong often with providers that maybe are not as experienced and don't understand that it's not just the revenue, but it's also the expense side that needs to be accrued accurately and tracked correctly. So, and this is not just something you do. This is a filing status you need to have where you notify the IRS of this change. So there's a lot that goes with it. So make sure you have the right guidance in place. But at the end of the day, practice owners are looking to be more profitable. They're looking to have cash flow so they can survive the ups and downs. Recently, I've seen a lot with, sickness or weather changes that are impacting practices. And if they're not ready with cash flow, that can really create a huge headache. And I think a little bit of what we were talking about, James, was around this expectation of growth from a practice. And maybe there's, people sharing out there how quickly or how big a practice can grow. And then there's what we are seeing behind the scenes that's possible and manageable. So can you speak a little bit more to like what you're seeing trend wise on practices growth year over year and like how that's being managed to ensure profitability?
yeah, absolutely. So we've seen a lot of practices grow at an incredible rate, almost like a 45% curve, going up with sessions and stuff like that. And I think the biggest thing is often in that path that they'll go through, it's very important for the owner to make sure they don't make what the Amazon kind of executive team likes to call irreversible decisions, like one-way door decisions, like you go through and you can't go back. One general
Mm.
rule I always kind of mention to my clients is don't go into any long-term contracts. Talk to me first. Because if you take a misstep and you can back up, well, that's okay. But if you get yourself into a long-term contract for like a marketing thing, or you get yourself into a long-term contract, which effectively is like a verbal contract by hiring an employee,
Mhm.
like we're gonna do this together, we're gonna give this a shot, and you're gonna be part of our journey. You sort of make this kind of commitment with someone socially, like relationally, but then you realize, oh my gosh, like maybe we're overstaffed now on an admin side or whatever. You don't want to do that either. So like just the idea is, as you go through these changes, and we're a bit self-advocating here, Carla, but it's very, very true that in this industry, there's incredible growth happening. I actually have the up on my screen. According to the U.S. Health and Resources Services Administration analysis, there's going to be a 62% increase in demand for behavioral health services by 2026. And, we're seeing that, right? So, practices that in the past were marketing to get inquiries are now just like, crap, what do we do? And I was actually working with one practice owner who came to us, and she had 5 providers. She ended up somehow having 5 admin people, and it was a result of
Oof.
these admin people showing up and basically saying, we're so busy, we can't get a handle on this. She just sort of kept handling the problem by bringing on more staff. And you can find yourself
Mm.
doing that, where you sort of, the growth is so fast, the intensity is so great, and you want to serve. These practice owners want to serve. They want to meet the need, and they want to be stable, and they want to rise to the occasion. But sometimes they'll do it by sort of, creating an obstacle for themselves, putting something that they then have to sort of, they're saddled with for a period of time. That maybe if they were a little bit more careful with those decisions, some of those irreversible decisions, they'd have a better result. So.
Yeah, and I want to address the growth rate you mentioned because I think when practices are smaller in size, I have seen those growth rates definitely be manageable year over year and, a little painful, but still manageable. Once
Mhm.
practices start to grow in the multiples of millions, we see that increase year over year decelerate from what we've seen before. And we're more in the 15 to 20% growth year over year, up to 28%, maybe on the high end 35. But just know that that doesn't happen by accident. That is because we're leading the growth of the company through proactive financial forecasting, through financial planning, through managing performance month over month to ensure that we're on track for that growth that we want to see happen. So it's very intentionally driving the company for growth and also keeping profitability in check throughout that journey because that's where things go wrong. You say you hired a 5 admin and all of a sudden now you have all this overhead you didn't have before. Instead
Mhm.
of it maybe investing in systems and processes, you plugged in people because that was faster and easier. But long term, that is not going to give you the profitability that you want to see as a provider, as an owner, and it's going to start to catch up. So, short term, okay to plug those holes with that support. Long term, we need to examine what is the right admin support level. What can be automated or driven by processes and other improvements? We can invest money on that. And then to address on the marketing side, I think is such a key aspect. I see a lot of practices, they say they want to grow, but then I see their marketing spend is like almost nothing. And we're like,
Right.
well, as a percentage of revenue, your marketing spend is not growing. So guess what? Your revenue is not going to grow. And then some are lucky that they just have referrals and they're consistently busy, and that's fantastic. They don't have to do marketing. But for those of you who are sitting there, where is this growth coming from? My practice is not growing at that rate. That's where we need to evaluate marketing strategies and also make sure that the ones that you do invest money in are generating ROI for you. Like you have an expectation going in of what you expect that ROI to be, and you're tracking the metrics and performance of your marketing efforts for each dollar that you're spending. And I don't see that often be the case, or maybe it's a conversion upon intake that is not really working. So it's maybe an intake team problem for sales conversion. So, or maybe it's like they're not even picking up the phone fast enough where the person
Mhm.
has already moved on to the next 2 other practices that picked up the phone the first time they call. So there's some things there that you need to look at, but definitely don't expect that growth if you're not investing in the right areas. And this is what we come and do is look and allocate the dollars to the right places to get the right outcomes that we want to see. And it's a great time of year to be doing that if you haven't already set goals for the year and don't know, where you want to, what you want to achieve for growth. Now is the time. And then doing an expense audit to say, hey, are we still invested in the right buckets for the right reasons to drive the right results? And having those right KPIs to help you track them, against the goals that you have set. So this is where we come in and dissect all of that and help manage some part of that to take it off your plate because we know there's a lot going on, but just, to kind of understand the different stages of growth. And you made a comment earlier, James, to me before recording that you mentioned there was a size of practice that was not stable. And I want to get
Mhm.
a little bit more into that because this kind of leads into that growth. Okay, fantastic. Everything is growing. Things are good. Maybe we overhire, but we will correct for that. And then you get to the point where your practice is not stable. I want to hear more from you on what's that stage that you're seeing this is happening at, and what are some of the elements that are driving that instability that we could address early on to avoid that from happening.
Yeah. So, we've seen this with a lot of the practices we've worked with. And one of the dynamics that you'll see that someone who joins a group practice is typically looking for all of the admin to be taken care of. They don't want to do that on their own, and they don't want to do that as a solo practitioner. So it creates an onus on that group practice to provide all the admin support. Now, very early on, when we have, even a small number of clinicians, we have a demand to provide admin support across the whole lot in terms of billing and HR and payroll and, the finances, and like everything is just sort of like the overhead of being in business with any type of business in
Mhm.
a group practice. And so then what's happening is the overall financial picture of that smaller practice, there's an allotment that goes over to this admin that essentially is the thing that's keeping those clinicians there. That financial allotment that allows that service to essentially draw in that talent, that reduces, what's left, from everything that's going on in the financial picture. And so then we've got salaries and wages challenged with the clinicians and or the owner, and frankly everybody's kind of bootstrapping at that point. And the biggest then threat that we have for that size of practice is those clinicians are going to think, well, I could go on my own, I could probably even bill less than I'm getting billed here, do private pay or whatever, work fewer hours, and that essentially becomes a competitive pressure to those clinicians to stick around. And so the small practice like that can be very inherently unstable because the clinicians are needing something they're not getting. They're either needing the admin and they're forced to do it because the practice isn't paying for it, or they're needing to be more productive financially for themselves, which just makes sense. So, and then of course we've got the owner, who, in that size of practice is wondering, well, hey, maybe I'd make more money if I was just a solo, like something. I mean, they have that same competitive pressure. Like perhaps if I was just on my own, again, maybe is how they think about it, I'd have a better go of it. So really what we're advocating with practice owners is, if you're going to go for it, really go for it, and bring
Mm.
allies to you and talk about where you're headed as a practice. And don't, a lot of practice owners we've met sort of feel they're being a little bit, humble, and they're not grandstanding, and they don't want to be like, they don't want to be too big, and this type of thing, and they're worried about the demands of being an entrepreneur as they go through this process. But the thing we try to help them understand is there's that size where inherently, because of all the combined competitive pressures and the financial results, the juice is not worth the squeeze, as I like to say.
Mhm.
And there isn't quite enough left over at the end, really, for everybody to have the result they want. So they've got to aim, for a size, it depends on how they want to design it, but they have to aim for a size of practice that will leave enough at the end of the day for everyone to have a great result. The clinicians, supervisors, the owner, the admin team, all those things, and then a little bit, left, of course, for the future. So that's where, like,
Mhm.
what is the design of this practice? How is it supposed to be structured? And not letting it be kind of this happenstance that we don't do intentionally.
Yeah, I'll address that last piece on the, it's got to be worth it for the owner. Cause I do hear this a lot. And sometimes, the conversation is like, well, 10% profit. I used to make more when I was solo. And my answer to those owners is, you used to make more when you were solo, but you had to work the whole time, all the hours yourself. So there's
Mm-hmm.
that. And then I contrast it by saying, yeah, it might be 10% profit, but you do not have a clinical load anymore. This is now on your team to produce, and then you happen to have a salary plus the 10% profit. So ideally it's higher than what you maybe were doing just on your own, right? But you're right, it has to be a certain size. And then we see practices that can do, up to 28% profit a year. And for the right size practice, that's actually a significant amount of money that they could not have done on their own
Hmm.
without maybe working 60 hours a week themselves as a
Right.
solo. So
Yeah.
in all that to say that I agree that it does have to be worth it for the owner. It has to be worth it for the clinicians working in the practice. Not everybody is cut out to be a business owner or want to own the whole business end to end either. So I think clinicians are looking for jobs where they can just come in, do their job, collect their paycheck, go home and get their benefits and be happy and have a great work environment and
Sure.
flexibility that they're
Yeah.
looking for. For those that are looking to go out on their own and create their own practice, we always tell our clients, like, you can't stop someone from like going into it and experience it, because you know how hard it was to get started, but they don't. And they need to
They
kind of go
don't.
out on their own. They need to go experience what it's like to be a business owner, because when they first start, maybe they take their whole caseload with them from the practice, because the practice, thank you very much, you just pay for my
Right.
whole caseload through marketing. And then they
Right.
don't realize that when they lose clients and they need to go remarket to continue to keep their caseload up, they have no idea how to do that. And this is not to scare any person going out solo, but just to be recognized that there is a certain amount of effort that goes into building a business and a practice. And if you haven't done it before, it's a lot harder than people make it sound. And there's a lot to learn in that steep ramp for you to be able to maintain that caseload over time, especially if you start to lose clients. And this is what the practice provides for clinicians who don't want to do that on their own, right? Is this space where you get to focus on doing the work. The practice gets to deal with all those headaches of bringing clients, making sure everyone has a full caseload, paying you even if you don't have a caseload, because sometimes, we have salary people. That is on them, right? That cost is on them. So to go back to the business owner side of this as a group practice, it is worth it because you're no longer tied to the chair to do the work. And so freedom is the other benefit of being a group practice owner that I think sometimes gets overlooked. And ideally, that freedom also comes with good compensation and a profit on top of that. So if that's not happening for your practice today, then you should reach out to us, because we're able to help shift that dynamic for business owners, that practices that maybe are like, why am I not profitable? Or why can't I afford everything? Like, am I overloaded on admin or leadership or whatever it is that the problem is? And we can spot those with simply looking at your financials and asking some questions about where you're at, what do you want to achieve, and then put you on a path to achieve that with a financial plan. Again, it doesn't happen by accident. It has to be intentionally managed. And that's why we're here for that. Now, James, I want to change gears a little bit to talk more about insurance and just kind of the environment, the pressures that practices are getting around the insurance side of things. Because we know private pay, they get to control a little bit more of it. Maybe in a tough economy, they'll have a harder time just because people are maybe not spending that kind of money anymore. But, there will always be a market there for them. But for the insurance side, it happens to you. It's at a volume, where a rate drop, a change can really make a big difference in the practice. And all of a sudden you're eating this cost up and you're not necessarily increasing rates because you're not in control of that, unfortunately, in some cases, as much as we ask for increases from insurance. And then on top of that, you're trying to compensate your team better. They want more, they want more benefits. They're asking for more. Everybody wants to make more. It's expensive to live out there. So, like, it
It
doesn't matter.
is.
You're
Yeah.
getting pressure
Yeah.
from all sides, right? And as an owner,
Yep.
you're trying to keep a profitable business running because you cannot run without profit. So tell
Mhm.
me, what are you seeing like from the insurance side? What are some trends you're noticing, and how are you kind of helping your clients navigate through that?
Yeah. The biggest thing that I'm seeing with a lot of practices is they end up with a concentration, in one particular insurance, and they've sort of got all their eggs in one basket in that way. And I always advocate for the owners to be aware of their actual net revenue rate, right? Because they might have an insurance that they're paneled with, and the rate might be preferential to another or whatever, but that insurance might have more denials. They might have different circumstances. The demographic just in that insurance bucket might be different, where there's more late cancellations, things like that, where they can't, fit things into the schedule. There's always a net revenue rate for what's actually going on. And they need to be aware of the spread. How many sessions do we have in this particular insurance bucket? And are we being intentional with our marketing to try to court another area? Most of the other thing that happens too is, we do an analysis with our clients of their payers and the net revenue rate and quantities by payer. We look at that, almost without exception. We've seen that private pay is in the middle. It's not at the top. So there are insurances that they are actually paying that practice more than their private pay rate at a net revenue rate, the net actually realizable rate. So it's important to look at these demographics. Like, okay, maybe you have a higher private pay rate, but maybe you have a whole lot more cancellations. Maybe you have people that aren't paying, in that segment. So just try to be deliberate about it. And Carla and I are very big fans of like the data and look at the data. But keep in mind, the only reason we see some of the businesses in the world today are because they all kept looking at their data. And it gets a little boring, it gets a little dry sometimes. But the devil's in the details, and so are the angels. You can find what's actually going on. And it's, to a certain extent, it sounds boring and it sounds dull. But like if you look into things and you start to ask your information questions, you start figuring out why you have some of the results you have. And so that's the biggest thing I would say that we're seeing is that we're seeing, practice owners needing to be a bit more deliberate about where they're marketing, what's in that spread, avoiding concentrations where if there's an insurance company that drops them or does a clawback or changes their rate retroactively or changes the terms where now they can't do this, that, or the other thing, that they're not like stuck. They're not just like, wishing they'd done something differently. So that's part of what we see.
Yeah, that makes a lot of sense. And that is just a business risk assessment, right? Making sure you don't have one main payer that if they go away tomorrow, you're out of business essentially.
Mm-hmm.
So diversifying your risk, diversifying your size of, insurances that you work with, a number of claims per insurance, reimbursement rate per insurance. Also making sure you're billing the right codes. Like I think sometimes the teams forgets that if you just do the session just to the certain amount of time, you can bill a different code that's reimbursed at a different rate. So looking at, some opportunities that were obviously it aligns with the treatment plan and it's the quality of care comes first and you're giving the
Of course.
clients what they need, of course, right? We're doing those reimbursement filings the right way, that you're not getting those denials and sitting on them, and maybe you're not even aware that things been denied, that there's good follow through and follow up on rejected or declined claims. And we look at receivables, right? Like there is a ton of money waiting to be received, and
Yes.
sometimes there's a catch up payment and we feel it, and sometimes there isn't, and it just takes longer and longer. And so being on top of those claims and like following up is important. So that's why your billing team is so crucial here. But also we see, reimbursement rates, we're tracking those month over month to see what's happening overall, and then get into the details, like you said, for when we see a change that's drastic or something that we don't like, we need to know what's happening, and the data will tell us what's happening with your practice. So don't ignore the data. It has a lot of the answers you're looking for, and taking the time and paying attention to it is going to be critical in making decisions. But if you are just like, I don't have the time, I need someone to come in here and help with that, that's exactly what we do, right? To support practices, take this off their plate and bring them the insights and the nuggets of wisdom of what we're seeing is an issue that we can solve because we see it in the data and are able to tell right away, okay, this is a problem and here's how we want to fix it, and advise you on how to fix it going forward to address that problem. There is sometimes where we
Mm-hmm.
just have to adjust how we're spending because, yeah, the rate is just what it is and we're not going to make a change, but at least we're aware that there was a change and now we can take proactive action to address it going forward and make the necessary changes. Whether or not they're fun or not, that's a whole different conversation. But sometimes we do have to have those tough conversations, right, James, where we're like, this is just not, the math is not mathing, we need to make a change,
Yep.
here's your options. And we talk about the options before we make decisions to understand implications. And we want the practices to thrive, we want them to be here so they can service that growth that we're seeing according to your report of the need that the population has of mental health service access. So we don't want you to go out of business. We want to keep you in business as long as possible. And that only happens if we're intentional about managing our numbers in general. I wanted
Mhm.
to wrap us up with just talking a little bit about what we're seeing with some inexperienced CFOs out there that are not helping business owners achieve results. And this has been very fascinating as we start to have conversation with owners who are maybe not happy about their performance financially. And some things are outside of our control. Sometimes with our clients, we can make magic happen. We are going to do our best to control the financial side, guide you the best way possible. And some things are just outside of our control, like, for example, insurance delaying payments. But we will at least explain to you why this is happening and, what to do about it. But I know there's been just so much marketing out there. Bookkeepers that now are CFOs that never took an accounting class in their life, or just people that are not qualified to be given advice. And it's very frustrating and very dangerous, I think, for our industry to know who are you working with and asking those
Mhm.
questions. How can a practice owner vet their financial professional to make sure that they're working with someone who has experience and knows what they're doing?
Yeah, I think one of the things that's really important to see someone having actual business ownership experience. Being a business owner is a very unique experience, and it carries with it its own education that to a certain extent can't be obtained anywhere else. And a lot of founders nowadays will talk about this. They say, you can't get it from a book. You can't go to Harvard Business School and learn what it means to be CEO, to be an owner. One of the people I really like a lot, his name's Chris Donnelly. He's got a great Instagram. It's Chris Donnelly Official, and he does a lot of great posts about the reality. And he had like 13 truths about being CEO. And number 3 I liked, which was don't pay attention to most of the Instagram CEOs. It's not what it looks like. Being CEO is very often gut wrenching, humiliating, and expensive. And what I guess I'm leading into there is if you have a CFO that you feel is judgmental of your business results, they're most likely not right for you because they may not actually understand that sometimes the odds are against you. Sometimes it just doesn't pan out the way you had hoped. And you've got to adjust. And, people talk about, oh, you learn by making mistakes. In business, you learn by making $10,000 mistakes or $100,000 mistakes. They carry a price tag, and it can be embarrassing. It can be gut wrenching. It can be humiliating. And you need someone who can partner with you who's going to get it, like who's actually going to get it. They've been in business. They've had to pay people's payroll before. They've had to, maybe skimp on something so that one of their team members did well, or they maybe had to absorb a loss because they made some type of mistake, like you want people who actually understand that, and
Mhm.
so I would lean in the direction of people who are running their own business, who actually have some experience as an owner or very very close to an owner in their past. I think that's sort of a hidden credential that a lot of people look over. That's really important.
Yeah, I love that you share that. I actually had a client that left, moved on to a cheaper CFO, we'll say. And
Okay.
then 3 months later, I got a call, and they're like, they just don't know or understand my business like you do. They
Mhm.
don't have the business expertise or experience. They're giving me advice financially without thinking about the business side. And so
Mhm.
I really think you hit the nail in the head on CFOs that understand how to grow a business, have run a business, and understand what it's like to have those experiences. And I always say you either pay for the lesson or you learn it from your best friend that paid for that lesson themselves. So, like, definitely get in a circle with other business owners to avoid those mistakes and having to pay for them, right? Or you
Yeah.
might be the one sharing the mistake to have someone else not deal with it. But it's so true. And we need to like have the right expert in our corner. We cannot have experts that are judging you. They should be empowering you. They should
Mhm.
be your supporter, yes, they sometimes have to have the tough conversations with you. And those are the kind that you want to have, because we
Right.
don't shy away from those. Sometimes we do need to have those hard conversations to make the progress we need to see. And
Hmm.
that they're there as your confidant, as your advisor, and that you can lean on, especially when things are not going well, right? When things go well, everybody celebrates. It's great. It's our
Sure.
job is easy. But when
Yep.
things are hard, where are they? Are they there to support you? Are they helping you through the big decisions, through the hard work? Are they putting in the work, doing the analysis, giving you the data? Are they answering your questions when you need it the most? That's really the true testament of a CFO, and really being that true business partner that is helping you navigate decision making with a lens of finance in mind, but also the hat of that business owner piece that James you share. So I love that, because I think that is definitely the kind of work we do, and we see that as a differentiating factor from a lot of CFOs out there that maybe are more, looking at the numbers and just reporting on the numbers, and they're like, okay, I did my job, good luck, you figure it out. And we're like, no, now we have 10 more questions we need to ask you to solve the problems we're seeing, and here's the action plan we want to take to go solve those problems and make sure we're making progress towards the goals we set. Oh, and we're off track now. Let's pivot. Let's think about 10 other ideas on how we can solve this problem. That's really what a CFO is supposed to be doing, to bring value to the company, to more than exceed their investment that the owner has made in bringing this function to the company. And so if that's not happening, definitely give us a call, because this is the way that we work. We want to make sure business owners get their value back tenfold, 20-fold, however many times we can, for the investment they're making in working with us. And this is really how we operate, to make sure business owners have the right support. And it doesn't hurt if they have corporate finance background or accounting background, because they're going to bring some of that experience as well as being a business owner to the table to help you.
Hmm.
James, this has been awesome. I'm so glad we got a chance to record. And I want to make sure people are able to reach out to you if they have any other questions or want to connect with you. Where can they find you?
Yeah, at our website, cacadvisors.com. That's a great spot. You can also find me on LinkedIn. James Byron Childress is my full name. Yeah, and it's always great to chat with you, Carla. I think you and your team are exceptional, and it's great to be amongst you. So,
Thank you so much for being here today. And if you haven't connected with us yet, make sure you check out our website at wealthworthwithin.com. There's a Let's Get Started, and you can book a free consultation there. If you're looking for a fractional CFO, we would love to partner with you on that journey of growth. If you are not ready to hire a CFO but want to follow along, we put a lot of educational content on our newsletter. You can sign up on our website. And if nothing else, hang out with us on social media at Wealth Worth Within on LinkedIn, Facebook, and Instagram. So make sure you follow us for other episodes and more information coming next. Thank you so much, James, for being here today. And thank you for sharing all the knowledge with our audience.
100%. You bet.
Until next time, thanks, everyone.